So let's take a moment and talk about refinancing. When is it the right time to refinance? How is it worth refinancing? Is it worth all the fees? So this video can be applied to refinancing your car, your house, any loan that you have, if it's worth refinancing it. So, the first thing you want to do is find a time machine and go back to 2020 when interest rates on houses were like 3%. If you could do that, obviously, if you could go back in time, buy some Bitcoin when it was like a penny or 2 pennies per coin instead of $100,000 where it's at. But if you can't do that, if you can only go forward and not go back in time, then this may be a little better for you. So, is it worth refinancing? Obviously, the easiest way to answer this question is looking at what your current interest rate is. So we'll for the purpose of this video, we'll talk about houses, but it can be applied to anything. But we'll just talk about housing. So let's talk about the mortgage rate on one of my mortgages. So the main house that I have, I also own an Airbnb, but the main house that I have, it is 2.25%. That's the current interest rate on my mortgage, which I refinanced. I want to say it was in 2021 or 2020, kind of in the middle of COVID when interest rates were super low. No one was going anywhere or spending money or doing anything. That's when I refinanced. I did have a 4.125 is what my interest rate before was for a 30-year loan. So essentially what that did is it brought my mortgage payment maybe, I don't know, $100 more a month, but it chopped off 15 years. So it's totally worth refinancing if you can get a good rate. Now, I know that there's a ton of things where you can buy down your rates. You just have to look at, at the end of the day, the simplest way you could look at this is your current interest rate, let's say, is 4%. And you call a bank and you say, hey, I want to look at refinancing my loan. What are your current interest rates? They'll run your credit and they'll let you know. Or they could just tell you, like someone with like a 750, 800 credit score, this is what you could qualify for. So that's, let's say that number, so the interest rate you have is 3%. The number they give you is 7%. It's not worth refinancing. You want to make sure that your interest rate is going to be lower and that the fees that you have to pay to refinance, because refinancing isn't free, you want to make sure that you have everything, that it makes sense mathematically and financially when and when not to refinance. So if it's 3% is your current interest rate and they're offering you 3%, but it's going to be like $5,000 in fees, then you have to factor in the interest that you're currently paying plus the fees. If it's 3%, if it's the same interest rate, it would not make sense to do that. Now, if they were offering 2.99 and you currently had 3, realistically, if it comes to refinancing, it needs to be at least a quarter of a point less for it really to make sense. So if you have 3% to your interest rate and they're offering 2.75, okay, now we have something we can work with. So you want to factor in the interest that that extra 0.25% interest that you're paying and make sure that it still makes sense. That with their taxes and fees and at the end, the life of the loan, if you're making extra payments, if you're making double the amount of payments, you're going to have your loan paid off super fast and you're not going to pay the total interest that like a 30-year loan would have. So you just want to make sure that you write down, you calculate the math, and that it all makes sense to you. But to summarize this and into something very short and something that's knowledgeable that you can take with you, make sure the interest rate is at least a quarter of a point less than what your current interest is, and make sure that you're not paying a ton in fees to make it not worth it. And you want to take less. So if you have a 30-year loan and let's say it's been 10 years and you want to refinance and they're like, okay, it's going to be 0.5% higher than where you're currently at, but your monthly payment's going to be lower, or they'll be like, oh, you'll have it paid off in 15 years instead of 20 years or whatever the math ends up calculating out to. So it's just, there's a lot of math involved, and you just have to make sure what makes sense for you and what doesn't. At the end of the day, that's what I would say. Make sure, sit down, do the math, and make sure it makes sense. I personally would not refinance unless I'm getting 0.25% less than what I'm currently getting on my interest rate. Now, because my interest rate is 2.25%, there ain't no way no bank is going to offer me anywhere under that anytime soon. So thankfully, it's just a 15-year loan, and I can pay down extra on it, but it doesn't make sense because right now, my high yield savings account is making more money than the interest that I'm getting charged on my bank account. So it makes sense just to have a pile of cash in the bank earning interest at 4%, which is what I currently get, and compare that to the 2.25% that you're paying, where, logically you might think, oh, let me just pay off the debt, but it makes more sense because you'll earn more interest keeping your money in a savings account. And then just once that builds up to $200,000 or whatever it is you owe on your mortgage, you just transfer it over and you can pay that off in whole. So that's what makes sense with refinancing. Make sure it's less than what you're currently paying, but sit down and do the math. Make sure you're not refinancing for a lower rate, but that's going to cost you more interest in the long run because it's a longer term, like going from 15 to 30 years. And I would not recommend pulling money out. Either if you're doing a refinance, just straight refinance where you're currently at and make sure that it makes sense mathematically. So that's all I got for you today. Thanks for watching, and I'll see you in the next one.